Let's move on to a query that Praveen has sent in. Right. Now, Praveen says that he's already taken a home loan. Correct. And he is availing income tax returns for that. Now, he wants to take another home loan for another house.
That's right.
Can he avail income tax returns for that as well?
Yes, he can avail the benefits of the income tax from his other property. What will happen is his second property will become a let-out property or a deemed let-out property, depending on whether he's actually letting it out or not. So, the first property then becomes his self-occupied property, on which he's going to get the standard benefits of 1,50,000 ADC and up to 2,50,000 on interest. The other property, he will have to report the rental income that he's getting from that, even if whether he's getting or not getting is a secondary matter. If he's not getting, then it will be a valuation base, which is known as the fair value rental, which a property of that stature can expect to earn. So he will have to report that as his income, and then whatever interest he is paying, it is not restricted to the 2,50,000 cap. If he is paying 3 lakhs or 4 lakhs or 5 lakhs on that property, the entire thing could be then carried forward as a loss in his income tax return, and by which he can actually save a lot of taxes, because some other income that he is earning will get reduced to the extent of this interest payment that he's making. So it's quite an interesting option for people.
But also, Kartik, if he's reporting this notional income without actually having given that property on rent,
that's right.
If he's saying that I am earning this much rent from this property,
correct,
and availing exemption on that, it also means that he's adding to his income. In that case, does he need to pay income tax on this notional rent that he is supposedly earning from that property?
Yeah, technically the answer to your question is yes. So he's going to report that as income. He will get a 30% standard deduction. So for example, the 100 rupees of the rental that comes in, 30 rupees of that will be deducted, and therefore 70 rupees will become his income. But against that income of 70 rupees, he might be paying an interest of say 120 rupees. So it's 70 rupees of income minus 120 rupees of expenditure or income for that. So actually he's got a minus 50 or a loss that he's made from that property. Now that minus 50 can then be adjusted from his income from salary or business or some other income, and he'll actually end up saving a little bit of tax. So yes, you have to offer your income as actually the income that you're earning, but against that you will also get this benefit. Now this is in a situation where you've not rented out your property, but assuming that he's actually rented out his property and he's actually earning 500 rupees as a rental income, then the entire mathematics would change. Then of course he's really earning money, and therefore he will actually have to pay tax, and there's not going to be any recourse out of that.
But even then, considering the kind of rentals that we get for residential property in India and the kind of EMIs that you're actually paying, because the capital values are way, way higher, it generally balances out, and you're actually you're gaining rather than losing because of these tax exemptions, right?
Indeed, absolutely. Most of the times that's what happens.
So there you go. It actually, from the tax point of view, from the tax perspective, it is actually quite prudent to have another home loan running. Of course, you need to be able to afford that.
You can watch live TV on our website mpnow.in. Find us on Facebook at facebook.com/magicbricksnow. And don't forget to click the like button. You can also follow us on Twitter at magicbricksnow. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/magicbricksnow.